evening. My name is Imran from Kenanga Futures. Okay, for your information today, this session is a joint collaboration with Chicago Mercantile Exchange Group, and this webinar is to create awareness and to provide education on listed derivatives to the participants. Please take note that futures and options trading involves substantial risks due to the leverage factor and may not be suitable for all investors. This webinar is purely an educational purpose. Kenanga Futures Sdn Berhad accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. Today, we are fortunate to have a speaker to join us for this session. Without further ado, let me introduce Kon Hao. Okay, Mr. Kon Hao has more than 25 years of trading experience in the finance industry, and he's an investment strategy. And currently, he's managing his own fund and founded Weipedia. Lastly, before we start, if you have any questions, please feel free to drop in the chat or use our Q&A session. Over to you, Kon Hao.
Right. Yeah, thanks, Imran.
Right, thank you.
Okay, let me just share my screen, my window, and we can get started. All right. First of all, I want to thank you, Kenanga Futures, Mr. Imran, for inviting me to share this very exciting topic to all of us. I have this excitement throughout the whole season, in fact. Now, how to trade and manage gold at its historical high. And I got to tell that from my understanding of my observation over the past few years, and is happening right now this year, that the gold is going to continue to move up. But I think the things that at every season, every cycle, if it move up to 2008, 2009, at the point of time, many investors and traders be having this dilemma: should I get in or not? Yeah, so I'm going to address the issue why I believe that gold is going to continue to move up. So once you have a certain fundamental understanding, then I think getting into the gold, whether it's for investment or for trading, you will have a better um, positioning how you're going to get into it. So of course tonight I would like to address specifically on trading the gold. And these are the topic that I'm going to go through. And I have given about 40 minutes to run through the whole deck with you. And then the next 20 minutes, we're going to have a Q&A. I reckon that along the timeline, if you find that as I present, some question just pop up, you want to ask question, just go ahead to use the messaging box and submit your question. So Imran over the other side will go through the question, and during the Q&A, we're going to have good time together for the next 15-20 minutes for Q&A. Now let's get started. And just a little bit about myself. And tonight I'm going to see a lot of what I mean by behavioral science or market psychology to identify the macro trend. And we're going to study that. And just a little good news to share. This year, I've been awarded as a trading view wizard. And my friend from Spanish say that it's a very prestigious award, which in Asia, I didn't know that until I Google about it. So just want to share the good news with you. I think it's just amazing. Yeah. And that's my disclaimer. So what I'm going to present here is not a recommendation. So please consult your licensed broker, who is Kenanga Futures. And my mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk. And with market uncertainty like today, should you buy gold with rumors of war again and again? Should you buy gold? But definitely, I'll advocate that you should buy gold. But how to do that calculated risk, which is with stop losses, and also a bolder risk when opportunity arises. So I think tonight definitely we're able to spot some opportunity moving forward. Whether you're an investor or short-term trader, I'm going to address that. I think investor, you feel that it's a real treat that if you have invested gold, you'll find that there's a absolute comforting that you have invested in gold or about to invest in gold. But for trading gold, and I will advocate why buy on dips. Of course, that doesn't restrict you to sell into strength as well. But we're going to address how to do that exactly. Okay, so I'm going to present to you what is it all about, since it is a collaboration between Kenanga Futures and COMEX CME Group, who also part of the COMEX group. Yeah, COMEX is an exchange of gold. And in the past, even right now, there's this regular gold called the COMEX gold. But I'm going to address the micro gold. So even myself, I would prefer to trade the micro gold because COMEX gold is sizable. I can't really trade multiple lots because one lot itself is representing at the price of 2007. That means the full exercise is 270,000 US dollars. So two lots is more than $500,000. So usually I would like to trade at least two lots. There's a strategy to it. Maybe during Q&A, you can ask me why. I can address that. But let me just turn your attention to the micro goal, which is 1/10 the size of the COMEX goal. Of course, if you have the appetite, go ahead to trade the regular goal. But I like to trade multiple lots, sometimes maybe 5, 6, 7, 8. Then I will structure it as I ride on the trend. We will address that later on. So, but when you take on the contract, you at least, I think, being responsible trader, you have to know what are you trading in. So the micro COMEX goal, it means that every 10 cents movement, it represents $1. So I just be a little bit creative to shift. How about $1 movement in a goal? What does it mean? It means that is a movement or profit or loss of 10 US dollars. Now, for example, if I saw a proposition to buy the micro gold at 2007 or even sell short at 2007 because I felt that's pretty topish. So what does it mean? It means that since $1 is worth 10 US dollars, so 2007 at a price tag of 2007, whether I buy or sell, there must be a value to it. So at times 10, it means that I'm actually carrying this gold contract, micro gold contract, the full value worth 27,000 US dollars. So as the price of gold move up at $1, I know that the profit is clocking every time you move up at $1 is 10 US dollars, 10 US dollars. Or either side, if I buy and the market go down by $1, I'm making losses of 10 US dollars, 20 US dollars, something like this. So of course, with Kenanga futures, you can have the account and you don't have to come in 27,000 US dollars. There's this facilities called the margin. So you can check with the Kenanga futures, can email Imran after what I presented if you're keen to have an account and use a platform to start engaging in the micro gold futures. Okay, so this is the most subjective base part. Now, I think the rest of it will be very interesting, but I thought of to start off the most subjective base. Then we have more mileage to go on for the rest of the 40 minutes that we have. Now, let's look at the central bank buying gold. And you can see, obviously, these are just the central bank over the years, how much gold they have accumulated. Of course, 2020, 24 have not ended. I don't have the data, but I'm quite sure that is this kind of range. But you can see that from 2022 onwards, the central bank for the first time in history has been buying a lot of gold. So there must be something to it even this year. Now, my projection for 2024 will be quite equivalent to 2022 or 2023, if not even higher. Now, means that they're still buying gold. So we have to understand when the central bank do something, especially for gold, it means that we have to really pay attention to why are they buying gold since 2022 and until today. Now let's look at a projection of a quarterly. So we know that 2022 they start buying gold. Now, so this is the year 2022. The first quarter, second quarter, they bought this amount, and 2023 an escalation of how they accumulate gold between the first quarter and second quarter. Now, 2024, I still don't have the data of the third quarter, but if you base on the first quarter and second quarter, the central bank are still buying as much gold compared to 2023 and 2022. And 2024, the first quarter, they buy slightly more gold than the first quarter of last year. And the second quarter, they also buy slightly more gold than last year. I'm not too sure about 2023. So that 2024. So therefore, my projection for 2024 is that the central bank are still acquiring gold. But why? I think the more important thing is that we have to understand why. So whether you invest in gold or you trade in gold, you know the direction of the gold market. Not just because they buy gold, you follow them, but I have to know why are they buying gold. Now, so they buy gold is because of the federal bank or the US has been increasing their debt, uh, or whether it's a QE or the bonds market, they're in debt. And you just got to ask yourself, is this debt maybe 2 years down the road, 3 years down the road, I got to ask myself this question: that is this debt is going to make a reverse and come down? And I do not think that the US debt is going to come down anytime soon. That means making a U-shaped recovery. I think since the beginning in 1966, as you could see here, the debt has been continuous on the uptrend. Now, if on any situation this chart, the US debt is going to make a U-turn, which I welcome because it's a good news for US and good news for the rest of the world. I welcome that. Then that is the time that I will sell gold. But let me explain why. I started acquiring gold in 2014, which I'm going to explain to you shortly later. Why I start buying gold in 2014. But in 2024, it's the best time to not just invest in gold, but also to trade the gold as well, which I'm going to explain to you why. And let's look at gold when the, or rather, let's look at the debt, US debt. Now, when US is in debt, it also means that the US dollars is declining, is weakening. I know it's very difficult to understand or absorb. What do you mean by the US dollars declining? You have to compare developed nations currency to developed nation currency. Now, say for example, if I'm going to compare dollar to Swiss, yeah, you could see very clearly that since the 70s to today, the dollar Swiss at one point was $4, exceeding $4. Now is 85 cents. I'm not too sure it's lower. I prepared this last month. And it means that the dollar against the Swiss has declined 4 times. Yeah, so that means the US dollars have depreciated against the Swiss of 4 times. So if you're able to look a bit closer to some of the currencies, the developed nation currency, where they do not print as much money, that currency actually appreciate against the dollar. Means that what our theory or what we understand here is true. As long as the US dollar continue to climb up, it also means that the dollar will continue to decline. Yeah. And let's look at the Swiss as of 2023. And we also know that the US dollars have printed 34, some say it's 30 trillion right now. And but let's look at the Swiss as of end of 2023. Their net debt stood at Swiss is 142 billion Swiss, which is compared to US is their debt is so much smaller. That also represents why the Swiss franc has been so strong against the US dollars. Now, what's the ill effect of a weak US dollars? Is the gold will go up. A declining dollar effect on gold. Now let's look at this understanding. I think it became so clear. And 2014 onwards, once I understand that, I've been doing a lot of presentation about it's time to invest in gold. It's time to invest in gold. But in 2024, at the beginning of the first day of 2024, I do not just want to invest in gold. I also want to trade the gold, which I explained to you the reason why. Now let's look at the dollar index, because dollar index is one of the best measurements against the US dollars. Why? Because it is a basket of their trading partners. I'm referring to US. There are a few trading partners. They derive this dollar index. And we could see that over this period from 2001 to 2011, the dollar index have declined. But during the same period, the gold has appreciated by 652% from this 250 US dollars to here. And if I'm going to look at this downwards on the decline on the US dollar, 66%, but this upward thrust is up 652. It means that the gold has appreciated against the US dollars by 10 times. Okay, so during this period, the US dollars go up, which is good. But during this period from 2017 to 2020, the US dollars had declined by 20%. And look at the same period, the gold have appreciated by 100 times, which is 5 times more than the dollar decline. And during this latest period, I think the dollar index is still hanging around here, but I could see that there's still a lot of pressure that the dollar index have declined since the COVID opening up. The post-COVID, the dollar have declined by 13%. But now, notice that I captured this about last month when the gold is at 2006, but today is 2,700 US dollars easily. Now, when the dollar declined 13%, you could see that the gold increased by 67%, and that's 5 times increase. I'm talking about dollar decline, gold increase. I haven't described about when dollar move up, gold come down the same magnitude. Okay, but I think that's not that important. The important thing is that I want to let you have understanding here is that why the dollar decline because of their debt. When there's too much debt, naturally the US dollars will decline. When dollar decline, we can see it's so evident that the gold appreciates. So we have to position gold as an inflationary hedge assets against the US dollar. So gold to me, many years ago, I began to recognize that gold is not just a precious metal, it is also a currency against the US dollars. Currency means that it's always a pair. When I say dollar, ringgit is a pair. When I say gold, dollar is a pair. It means that when dollar is down, gold will move up. But this very interesting relationship between dollar and gold is that whenever the dollar move down, the gold appreciate by a few times. But whenever the US dollars go up, the gold depreciate by the same magnitude. Okay, so I have to move on very quickly because I don't have a lot of time, but I think I hope you can stay with me because it's a very short presentation, but it's packed with a lot of information that you have to know how to manage gold moving forward. Now, so why is gold uptrend unstoppable? So we talk about gold. There's a lot of demand from gold from the central bank, and we also understand that there's a weakness in gold and there's a US debt. So now you notice that the sequence is there's demand by central bank, gold weakness, and US debt. Now I want to reverse this order. Once we're able to reverse this order, we're able to see the gold demand with greater clarity. We have to understand that why the central bank around the world has been accumulating gold since 2022 because the inflation of US have hit a high of 9% in June, and that was a crack within the dollar system, the crack within the whole global inflation system. So if you're going to ask me truthfully, if the inflation is over, I'm watching it very closely. I don't think so. There's always a risk that inflation may just make a pivot turn and move upward. So we have to be very careful. It's not just central bank buying gold, but because we understood. So we have to reverse the order where you have to understand the US debt. So I got to ask myself very carefully here is that if US dollar or US debt is ever going to make a, pivot downwards. And if my answer is no, I think the US debt is going to continue to move up for very good reason, as we could see. I'm not going to discuss about the US, how they manage their money, but I think I know that it's almost impossible at this point in time moving forward for the next 5 years or even 10 years for the US debt to move down. Of course, I hope that the next president, whoever he or she is, will able to have this ability to reverse that. I hope that, but if not, I think likely the US debt is going to continue to climb. For that reason, then I'm going to see the dollar is going to continue to have weakness, and very naturally, that gold will continue to move up. So now you see why the central bank are accumulating gold in such uh, a madness, I would say. Now let's go and look at a gold trading strategy. So I think we're making a good progress down here in our time because I really want to spend more time with Q&A with Imran and all of you. And not forgetting that those that just join us, And I will really encourage that if you can start to fire your question on the message box, and Imran will evaluate all the questions. And now let's go and look at the gold trading strategy. So it's very important here is that this afternoon I just have a discussion with CME group people, and they say that Kwan Hao, you're just amazing because although you're a trader, but you also look at the macro so dearly. I say yes, it's so important. Now let me just review to you why as a trader the macro is so important. So once you understand the macro, it means that I have the understanding of the foundation of why I want to invest in gold and buy gold. So now, as a trader, is that once you're able to determine the main trend, if the main trend is moving up because of the fundamental reason, sometimes of course you'll come down to do some retracement. But as long as the main trend is moving up, my strategy for gold as a trader is that I will try to focus on buying on dips because it really makes sense that the uptrend of the gold that I understood is not just based on technical, it's based on fundamental standing. Now, as I drill into the daily chart, the hourly chart on the gold, my objective is very clear because the whole trend is uptrend. I will try to avoid going against the trend. But of course, there will be times that there's some selling opportunity or sell short opportunity. I will do just that. But I will keep it short term because the main trend is uptrend. My focus is that I want to buy on dips when opportunity arises. Now, let's go into the technical strategy. Now, first, we look at the big picture. Now, as we look at the big picture like this in the monthly chart for the gold, we recognize what was the fundamental reason. Now, I started investing in gold in 2014 here. Now, it seems that I make an absolutely right choice, but I have to say that as an investor at a point in time, it was painful. Why? Because I invested somewhere around here, but I waited for 4 years before it started to move up. Yeah, so I have transited from investing in gold, still investing in gold, still holding those positions. But now in 2024, if you realize that you have broke above this 2000 and it make trading very feasible. I'm going to share with you how it works here. Now, first of all, we understood the fundamental of gold. And what I'm seeing here is that gold should, I wouldn't use the word will, should continue to move up. Say, for example, if ever the gold dipped to about 2000, on my investment cap is that we understand the fundamental of gold we spoke about because of the debt, followed by the dollar and demand of gold. So these are the three things. Now, if ever the gold came down to about 2000, say for example, as time passed. Now, at this 2000, I got to ask myself, is this relationship still hold true, which is the US debt, the weakness of US dollars, and demand for gold? If the debt is still hold true, I will continue to hold on to whatever goal I have, the investment portfolio, and may consider to acquire some more. That means on my wins, I try to average up. Fundamental, it works for me, and technical, that's how I use it. Now, as I share on this monthly chart, it will be applicable to traders because the principle is you can apply this principle throughout all time frames. Now, how I draw this trend line is not just any trend line, but you try to understand the trend line. How to draw a trend line is that you try to find at least three significant trough. One, two, three, four. That means you try to find the trough and you try to align them at the best fit. You have to have at least three. The more, the merrier. And we can see quite clearly there's at least a few here. And I would say that this is a primary trend line. And I'm going to draw again. You can see that it connect one here, two here, three here. And I'm going to term it as secondary trend line. Now, this is a monthly chart. It doesn't make sense for traders. I know that, but this is more for investment. If the situation it dropped to 2,000 US dollars, I'm going to check on my fundamental. If what I understood is still the same, where the debt is still continue to climb, and there's a weakness in dollar, and of course, naturally, there'll be demand in gold. When there's demand in gold, the gold will find its support. If they hold true, I will continue this campaign. Now let's drill down a little bit deeper here. And I'm going to look at this point onwards, and I'm going to go to the weekly chart. And this is exactly what I do for my trades, for my midterm position. And later on, we're going to look at the 3 hours chart to see whether there's any proposition for some trading opportunity the next few days. So this was what we stopped, and this was the secondary trend line and primary trend line. But the same principle applies here, is that I have to try to look for at least 3 significant trough. I found 1, I found 2. The third one may be in the making. Now, this will be the weekly chart, what I call the primary trend line. I put it dotted so you can see here. Now, similarly on the weekly chart, I have this 1 support, 2 support. I'm looking for the third one. So I'm going to see how it reacts to it. Now, as it comes, now this may apply to 60 minutes chart or even minutes chart here. This principle is applicable. Now, how I look at it is that we look for a reaction. So do not put a buy order here. But I'm going to observe to let it drop. If it ever drop to here, say for example, and I'm going to see how it react. If it's reactive, it forms like a hammer here. So the next moment, the next period or on the weekly chart, I will know exactly what to do. The risk became very small. That means as it retraces, it formed a hammer like this, then I will take a risk, a calculated risk to get into a midterm position on the weekly chart. Of course, you can use the COMEX micro goal to do that. Now, I'm going to do this, take reference of this point. I drill into the daily chart of the goal. So this was the weekly chart that we make reference. And I'm going to further fine tune on this daily chart. 1 trough, 2 trough, 3 trough, and you can see that it kind of hang around here. So when it tests this third trough, and this may be fourth, I'm going to observe very closely how it reacts. And the reaction is that it crossed below, but it still tilt up. Then when it kind of get back to this uptrend line, it gives me this gap, and I like this gap. So it means that on any retracement, you can go for, try to do a buy and use a stop loss around here. Okay, so this is just one reference for you. And I'm going to further drill into the 180 minutes chart here. I make a reference here, and I'm going to move here. And that's what we can see here. Now, this on the 180 minutes chart, this is where traders can start to conclude some ideas. Now, of course, if you are traders, you don't look at, you can look at monthly chart, weekly chart, daily chart as a reference. Okay, then when you trade, you should really look into the 180 minutes chart. Means that if you're holding a position for within a day, a few days to a week, less than a week, then this 180 minutes chart really makes sense here. Now, same principle apply here is that you try to look for this second trough, second, third. Now, I would say that, let me just zoom in a little bit here, is that, did I prepare the latest one? So this is the latest one that I have. Let me see. Okay, I have prepared, okay, I'm going to go into the actual chart itself. Maybe then that will be a little bit more sensitive, as you could see here. 180 minutes chart. You can see my trading view. If not, Imran, can you let me know that you can see my trading view? Now I'm on a trading view right now. On the 180 minutes chart, this was the reference. 1 trough, 2 trough, 3. Now, when I say reactions, this is what I mean here is that this is a good low, and then I make adjustment and find the second low. As I could see here, when I say that if let's say you're here, and you do not place an order at all. So you let this trend line be a reference point. Let the market evolve and you observe. Now, earlier I did mention about this trend line is a guideline, and you observe and wait for the market to react to the trend line. So as the market progressed, I saw this hammer. It sit very nicely on this uptrend line. So these are sometimes could be noise, and that will be a proposition for a buy point here. That means you can do a buy on the micro COMEX goal. and put a stop loss here, and then you wait for the swing. And we could see here. Now let's try what will happen to the next few days to come. Now, so this is my projection. So first you're going to start off with the lowest point, and then you plot up. You find uh, a proposition here. Okay. Okay. I would say that I'm seeing something here, which is this. Okay. Now this low, second low, third low. Can you see that? Now the market is wavering in and out. It's always happened. Now, when it waver in and out, I'm waiting for a reaction. A reaction means that, let me just stretch a little bit longer here. One low, two low. Let me be very exact about this. You can see that it's reacting very nicely to this few lows. So this is a good trend line. And as I observe, the market is, let's say I have no position, what am I going to do? I'm going to let the market continue to weaver in and weaver out. Now, imagine they're going to extend this line that we have done a study earlier. Let me just get this up setting. I'm going to extend to the right. Okay. Now, when I say reaction means that if any of the timeline, that means is quite is wavering in and out of this trend line. If the market suddenly just pushed down very strongly with, let's say, an inverted hammer, it pushed down very strongly. Now, the next few moments, I know that I may want to develop into a very short-term sell into strength with a stop loss at the highest point. And my objective could be around here, just about 40 points lower. So that's how I do it. And if not, say for example, if the market is going to suddenly push up and sit on top here very nicely with a hammer or whatever, and this could be my entry point. So it may seem like I'm buying the high, but because it is going to be reactive to this trend line, I think there's a proposition for me. Buy with a stop loss of whatever the low could be, and then I'm just going to take one swing up. Okay, so where I haven't got opportunity to describe to you how to do a swing up trade, but I hope you're getting this, and you see that you can just trade along with the market dynamic and market uptrend, whatever the trend is given to us. So I think I've just completed the trading strategy, but I'm going to move on to the oil, silver, and the palm oil. You're going to see how they works, and definitely can apply all this strategy I just described to you to the other contracts as well. Now let's look at this chart on gold. On CME, the micro matters that you could see that since 2020, this were the COVID years, where whenever there's uncertainty, traders will get into gold, investors will get into the gold. And even 2024, when you look at the market behavior, you can see that there's a lot of traders getting into the precious metal. You know that they like the precious gold because the market environment is not too healthy. So therefore, they rush into the gold market. Just looking at the absolute numbers of the micro matters itself. So to me, it speaks a lot of volume. And now let's look at gold. And I'm going to get into the crude oil and palm oil. And then I'm going to close up with the silver. And I think that we have a lot of time for Q&A later on, that I will just move in and out of the trading view. We can look at the gold. But of course, I hope they can ask me question specific to the gold market. Now, if you look at this gold since COVID, the gold has been at all-time high. And gold to me is the best inflation hedge. And I think for those that has followed us since the beginning, you understand why, because of the US debt. US debt weakened the US dollars. When US dollars weaken, gold move up. When US dollars weaken, inflation also pick up. So that's the reason why I say that inflation, although it came down to 2.4%, but I'm still very cautious because anytime it can pivot up. Now let's look at very closely on this, all these commodities. Yeah, because all these commodities, it will translate to there's some lag on the CPI inflation data. When commodities start to move up, it will take a few weeks or few months later for CPI to pick up the data. So it's also good to look at the commodities itself. Gold is still up. Yeah. So I have this statement that I made. I think a lot of economists, they like what I say. I say that gold is the leader of the rest of the commodities. When the gold is at high, the rest of the commodity were based on their time and season. They will pick up subsequently. And we could see that there's some pivot here in the soybean. There's some pivot in the soybean oil and the rest as well. Okay, I hope that it will not continue to pivot up, but if it's going to pivot up, that means inflation is going to point upwards again in some weeks and months to come. So you've got to watch it very closely. And this is so interesting here is that most of the commodity is just like the CPI inflation data. You still remember the CPI was about 2%. Yeah, because the Fed always want the inflation to be at 2%. Then it went up to 9%, still remember, but this is soybean. Yeah, but it's also a commodity, it's also inflationary data. 9% and today's CPI is 2.4. Yeah, not the good old days where it's about 1 or 2, but now it's at 2.4. There's a risk that it may go up, and I'm watching gold very closely. As long as it continue to move up, the rest I'm watching even closer that it may also pivot up subsequently based on the time and season. Now let's look at commodity data very quickly. Here is that I just want to point out to you here is the relationship between gold and inflation. Now you could see that throughout this period, it mimicked very closely, especially here as gold start to do a U shape, and so was the inflation. Yeah. So now, so what I'm trying to say here is that gold leads inflation. Now, gold now is at a high, but inflation is at a low. But throughout history, you could see that gold and inflation, they work hand in hand together. So now there's some divergence here. Sometimes things happen. Gold is moving up, is the inflation data. To me, it's an inflation indicator. Inflation, I have to check it very closely what is happening here. Okay, now I'm going to layer it with crude oil. Between crude oil and inflation is even close tie that you could see throughout past history as gold moved down, inflation moved down. Okay, so now I'm going to watch it very closely. The next few moments, if gold is going to, or rather crude oil is going to start moving up, inflation may pick up. Now, then let's look at the next strategy here about, I'm going to address about crude oil trading opportunity. But this is the contract specs. You can take a screenshot. I'm not going to go through it. So mainly it says that the micro crude oil, if you buy 70 US dollars, the total worth is 7,000 US dollars. So it's the same as a similar concept with the gold, which I explained earlier. Now let's look at crude oil and palm oil. And when I was in Malaysia just last month, I mentioned about, I believe that this time round, crude oil or rather palm oil is going to lead the crude oil. I think a lot of Malaysian traders, they kind of what? it's always it's always palm oil or crude oil lead the palm oil, kind of palm oil follow. But I say that, but this is not what I say, but this is what I've observed. Yeah, which I observed that palm oil is moving up, which crude oil is not yet, is below $70 right now. It's a bit strange with the war ongoing, but sometimes it happened like that. Then we do an intermarket analysis where I saw that palm oil is already moving up. So I suspect that the crude oil will ultimately follow. So sometimes it's good to do intermarket analysis as well. And you could see the relationship between crude oil and palm oil is so closely related in this history here. Now let's look at the palm oil. In our weekly case study that I do every week with the members. So this was a case study I float to the members on the 3rd of September. So that was just about 6 weeks ago. And we saw this resistance line very beautifully. Yeah. And then there was this hammer. Yeah. So hammer is my entry point. Yeah. Hammer, it will be my entry point. So there's some theory behind it, but I do not think we have time to go through that. But I use hammer as an entry point, one of the entry point that I suspect that the crude oil at the point in time until September, it's going to range bound during this case study on the weekly case study that we have, and ultimately it will break above. And notice that the pump oil, it was at 3932 back then. But where is the crude pump oil today? And I just captured this afternoon that you can see that it's very clear we don't have many more days, trading days at the end of the month. Now, if this end of the month it closed here, which is likely the case, I think the palm oil, I think the Malaysia traders very happy about this, is that I think the beginning of the up move for the palm oil should be there, yeah, for at least the last quarter may able to flow over to the next quarter of 2025. Now, my proposition about crude oil is not palm oil, but for the palm oil traders, I think you should be quite excited. Now, so earlier we studied about the relationship. You still remember about this? And we saw that the palm oil already start moving up, my September case study. But now I suspect that the crude oil, which is just captured this afternoon, for whatever reason, is under a lot of pressure, but it's going to weave in and out. I believe that this, you could see this triangle here, is going to get narrower and narrower. And it may, according to their time and season, it could be news, fundamental development. Once it start to break above and sit on top of this downtrend line, it means that palm oil is going to develop to an uptrend. So I'm watching this very carefully. Sometimes I hope I can get in a little bit earlier, but if I'm going to get in a little bit earlier, it also means that I got to get my cash stuck. So I try to get my timing to be quite absolutely right as much as I can. Okay, it means that I have to pay a premium if it go up to $75, but it is fine. I just want to get the timing more accurate. Last one. Okay, so I prepared this about 1.5 months ago. Yeah, I was in Kuching. I was in Kuching sharing about silver. And today silver is about 34 US dollars. And same here is that I love silver. Of course, it's also available in COMEX. COMEX is an exchange. It's also under the CME Group umbrella. It's available in COMEX. And then the gold, silver is 27, today is 34. But if you notice that each time when the gold move up, subsequently the silver move up even more. And that's my proposition, not just in Kuching in June, but even for today as well. That when gold move up 7.5, the silver move up even more. So this was the goal when in June when I presented, it was 2003, but now gold is at 2007. But you could see that silver is moving up fast and furious. Okay, so if you miss out on gold, you can also look at silver as well. I believe that they'll catch up. Okay, and we're going to enter in the Q&A, but before that, this is how we can get connected. You can visit my YouTube channel. The YouTube channel is my name, Kon Hao. I provide a QR code you can scan and subscribe to it because every week I'll do my best to present insights of the market, the opportunity. So of course, very thankful that CME has sponsored me to do some market insight video analysis. I think because of the sponsorship, it's a responsibility for me to do it every week. So which I really enjoy that. And then that's my website, weipedia.com, and there's some resources. You can visit that. Also provide a QR code. And of course, you have any question for me after this webinar, you have something burning question you want to ask, you can feel free to email to me at conhao@weipedia.com. Okay, so I'm going to turn this time to Imran for the Q&A, and I think we're exactly good that we have 15 minutes for Q&A. Yeah.
Thanks, Konhao. Okay, if anyone have a questions, you can post it down there. But thank you, Konhao, again. Definitely a fruitful session for all of us. And just for your information, everyone, we are currently running a CME campaign, mastering futures from the 19th, which has already started from the 19th August to, and will be ending soon on the 15th August, 2024. Sorry, 15 November 2024. So from this campaign, you'll be able to win a RM 100 Ringgit Touch and Go credit vouchers when you successfully open an account with us and trade at least one contract of CME Group products, and which is limited to only 88 successful account openings. Furthermore, an initial deposit of 10 Ringgit is only required compared to the 3,000 which was previously required. Additionally, with every successful account registered, you will get a basic free recorded e-learning videos, and the top 10 in the highest trading volumes traded for the CME contract will win a 2 days future trading masterclass. So If anybody have questions, please direct your questions to the chat. Anyone? Okay, if so, I think we have one questions. Kon Hao, just post in the group, okay?
Sure.
The chat. Sure. All right. Okay. What technical analysis tools are particularly useful for identifying entry and exit points when gold is at a historical high?
Okay, earlier I mentioned, maybe I just go to my sharing. I'm not too sure I'm still sharing my screen. If you
You're
can
not
see,
sharing. Okay, you're sharing. I can see it
I'm
now.
not sharing now. Okay, yeah, that's good.
Thanks.
Okay, what I should do is, let me just point out some, maybe I go to the 3 hours chart for some short-term trading strategy here.
Okay, Kon Hao, we have another second question, but okay, never mind. Let's finish these questions first.
Okay, yeah,
All
sure.
right.
Well, now, as I mentioned that now I could see that we kind of saw the market have one significant trough, followed by a few here. Yeah, 1, 2, 3. So we could use this trend line. Yeah, so we have to qualify whether this trend line is quality trend line or not. And as of now, the market is wavering in and out. So when the market wavering in and out on this qualified trend line, I will term it as qualified trend line. What does it mean? It means that the market, I'm not sure, is wavering in and out. But I'm going to wait for your question is about how to identify entry point. I'm going to wait for the market to maybe sit here. Okay, when it sit here, if it can give me a hammer, for those that know hammer, please respect the hammer. And what I'm going to do here is that, let me just allow me to change the setting here. Okay, the background as no background. And I just give you an imaginary hammer here. Yeah. Give me a moment. Okay. Now can you see that hammer? Now, as the market developed, earlier I did mention that you try not to put in any bid or place a buy order, but you let the market develop, even go higher is fine because you're trading, you're just participating in the given market volatility and momentum. Okay, but we have to ride with the wave because at this moment, the wave, if the market develop as such, the wave is showing me is uptrend, then we wait for a significant point, which is the what I call the biting point. Um, you can go to the website, you have more resources on that. And then you saw this hammer, and this will be my entry point because your question is about how to identify an entry point. This will become my entry point. With now, you have to understand because you're a trader. So, trader, sometimes we don't want to hold through. What if the market can go against us? What if from here the market start to dip down? Then basically, if you buy here, and if it cross below this low, I will just put a stop loss. So whether it's going to support here or not, I'm not going to second guess myself because to me, honestly, this is just a game. Yeah, so a game of risk management because I want to have more wins and lesser losses. But the losses cannot be too big. It must be very measured, very calculated. That's what I mean. So as I accumulate or amalgamate all this trade, that means more wins. Sometimes I expect losses, small losses. Overall, the whole month, I hope to see that the whole account is up. So I think I just go beyond your question of entry, but also some uh, risk management as well. Okay, so
Right.
I happy to go back to the next question.
Okay, the second question comes coming from Henry Ting. You use which time frame for short-term trade?
It really depends on you. For example, I can go into 1 minute chart if I want to, but provided 1 minute chart means that I'm scalping the market, and I must have the time to do that. And usually I don't go into 1 minutes, but you can go into 1 minute. But of course, 1 minute the strategy will be different. For me, the smallest time frame I use could be about 5 to 15 minutes for intraday means that within a short term time frame. Now, let's say I'm going to use 5 to 15 minutes for intraday or 1 or 2 days. I also want to make sure that during this intraday period, until 4 a.m. or 5 a.m., I'm still awake. I'm still available. Yeah, so it really depends on yourself. First, whatever time frame they're using, what I just shared is applicable throughout all time frame. I hope that you can I can convince you that I just show you, right? Monthly chart, weekly chart, daily chart, you can apply that. Even for 5 minutes, you apply that. But the next more important question is that whatever time frame they use, make sure that you have the profile to lift it up. Means that if tonight, the next 2 days, I'm going to trade 15 minutes, means that it's pretty short term, but can you stay up or not? If you cannot stay up, then don't use the time frame. It's not fair to yourself. But if let's say you're going to use the time frame of daily chart, means that I'm going to hold a position for beyond 1 day, maybe about 1 or 2 weeks, because as and when you put your stop losses there already, you can watch it very closely, then use 1 or 2 days. So in short, I think my answer to you is that you have to check on whatever time frame is applicable. But my answer to you is that you check on your profile, what kind of lifestyle, or rather you have to carry out that trade, that time frame. Yeah. Thank you.
Okay. The next question comes from Wendy. Hi, since silver is relatively cheaper than gold, is it good options to invest in silver since gold is quite high price to buy? Thanks. And the second question from her is that if so, to invest in silver, can you recommend where to long silver?
Okay, so definitely that's my mandate that I would love to have more silver. I have some silver, but as always, as an investor, okay, by the way, I have to clarify. I have two portfolio, make it very clear, distinct here, is that investment is one portfolio, trading is one portfolio. So investment, you can buy physical silver if you want to, yeah, but it's really up to you. You can buy paper silver, that's for long-term hold. So you put it aside. You should not mix up with the trading side. So of course, trading side, uh, you can use Kenanga futures to trade. Yeah, so you keep it very separate. Means that you park some trading fund in houses like Kenanga futures, and then you can see your account balance and you start trading off. What you're seeing here is the 3 hours chart, 1 hour chart. So yes, definitely. I believe that I would still like to trade invest in silver. Yeah, I think I still like to invest in silver. What come to a point now, silver is also very tradable because it's pretty trendy right now. When the market is very trendy, I do not just want to invest in silver because the question is silver. When it became trendy like this gold is very trendy. It make trading quite easy right now. I'm not too sure if you're seeing that. To me, it's opportunity can be anytime if you start to develop. Okay, so uh, specifically, what kind of product to buy? I think a better position will be consult your banker or your broker like Kenanga Futures. I think they have a license to advise you. I do have a license to advise you on product specific, so I would not want to cover what are the product to buy. Check with your broker if you can. Yes, definitely, I would love to have more silver, but the question is always, do I have extra cash lying around to buy more silver? So that's for investment. But trading, the fund is there. So anytime I would like to buy on dips, yeah, which I think I just missed it the last 3 weeks because I was so busy with my work. Yeah, I wanted to buy silver about 31, 32, but now it's much higher. But anyway, the opportunity will come again. Yes, Imran, is back to you.
Like, thanks for answering. Hope Wendy, I hope Conhao answered your questions. And okay, going further, it's from Edmund. Is gold silver ratio a good indicator to invest in silver? Is gold silver ratio a good indicator to invest in silver? Maybe Conhao, maybe
Um,
you can answer that one.
I do not know what's a gold silver ratio, but let me see if I can get hold of. Maybe I just share with you my presentation slides again. Whatever ratio you're talking about, I believe in ratio. My last few coming up video, I spoke about how to track inflation with certain ratio, how to track the economy with ratio. how the track economy ratio. I'll publish it this coming Sunday, so do look out for it on my YouTube. Now, if you talk about the ratio, and I would say that if you look at the past ratio, which is this is gold, this is silver. When gold start to pick up, gold pick up even more, or rather silver pick up even more. Can you see that? So the ratio is as such. Yeah. So when gold move up 7.5 times, the silver move up 12.4 times. Now, of course, we know that from this trough, 2014, the gold has pushed up quite a bit, but I believe in time to time, because at the lower base, as it start to move up, the percentage gain, it will be much more. Okay, and I think I missed out one um, demonstration for you earlier is this one. Okay, let me just go back to my gold charts. So earlier I did mention that um, during the past, I start investing in gold. I think this question would be really good for Wendy. Yeah, so I invest in gold in 2020, in 2014. Yeah, so 2014 is here, and of course 4 years of long wait. So finally, I see some result. Okay, but that's fine because that's investment. We need time. But trading, I have to be very sharp. I have to have that precision. So if you refer back to some of my old, about 1 year old video on YouTube, I did mention about one thing here. Now, why in 2000 in 2024 I have this proposition where the goal is time to buy. Now, let me just go back to this chart, the quarterly chart. Now, if I'm going to look at the quarterly chart for gold, I'm going to share with you why 2024 I I I developed the view that goal is to trade, to buy and to trade. Now, if you look at this understanding here very closely, maybe I just move up to about 2000 points here. Yeah, so it's 1998, it's about 2000. Then you could see that in market psychology, I'll talk about market psychology, the behavior of gold. This is a quarterly chart. And during the COVID years, it tried to break above 2000, it failed. So in 2022, it tried to break, it failed. And then on the same year again, they tried and it failed. Yeah. So last year, they tried and it failed. But towards the end of last year, at the last day of 2023, it closed finally for the first time above 2000. So to me, it became very clear that 2024, the market will be very trendy. So it's quite easy to trade, meaning that the whole idea is to just buy on dips. You look out, you use all this trend line. I know there's now many lines, but if you follow me from the beginning, you'll realize that this line is not difficult to plot. You need practice. Yeah. So all these are buy on dip strategy, buy on dips, and of course you can narrow down to hourly chart. So I thought I just want to, because how I started was I did say that I promise you that I want to share with you why 2024 is also very good for the traders as well. Okay, so I think I passed the time back to Imran.
Right. Okay. I think we have another 10 more minutes before we end the webinar. Okay, so I think this is the last question. The price that from David is from David, the price trend, you use gold months chart versus silver 3 months chart. Why silver 3 months? What is the liquidity needed for gold micro trading to buy the future?
The micro gold or the micro silver, the good news is very liquid. So you can even look at the minutes chart to get into your trading activities if you want to. So there's no issue about illiquid market. I'm not too sure if that's your question. Um, yeah, I hope I answered the question. It's very liquid, so I have no doubts that the micro gold is illiquid. But I think one thing you have to note, because when you trade futures, they are active month. Do check with your broker, who is a Kenanga futures, about if you want to get starting in the specific contract month for gold. You just check them which one is the active month right now. Because when the contract about to expire, then the next active month will be other months. But you can always check all this information with Imran. But of course, some will worry about gold will expire, and therefore that's what brokers are for. So you can see that brokers are not AI, not bots, right? So they are physically human, and just call them. Is something I have to stress about Kenanga Futures, give you some stress here, is that it's their responsibility to remind you when the contract is about to expire. Uh, so, or you can always call, it's a mutual responsibility that you can also call your broker if it's going to expire. You ask them to guide you how to do a rollover. Yeah, so that's what it sounds complicated, but it's not. So it's quite straightforward. But I would really encourage that you get your finger wet a little bit first. So because as you get started, things will start to snowball. I think I have one more question about indicator.
Yes, that would be from Henry again. Do you use other indicator to complement your entry level apart from only trend line?
Yes, the other indicator that I would love to use is it's not really indicator, but it's live information. It's called volume. Yeah, especially when you know that I like to get into the market with hammer, but before hammer, after hammer, during hammer, I'm gonna study into the volume. Because the activities it does makes a lot of sense to me. It must be a high volume period. That means I hope that a lot of people get into the market. There's psychology about what hammer is all about. You can visit my website. I explain what hammer is all about. But it must come with volume. So indicator, I use volume. I'm not too sure. Do you call it indicator or call it studies? I call it a studies. But the other indicators, personally, I enjoy using, but you don't give me the sensitivity of specific entry, but give me a understanding of the market weakness and market strength. Is that I like to use MACD, but when I use MACD, it's not just to look for crosses. I look for divergence, because through divergence, of course, you can practice it with RSI, stochastic. Go ahead to use it, but all these indicators I use them for divergence, because divergence will give me an understanding of the current price. Is it overbought or oversold? So if it's overbought, oversold, for example, the hammer is oversold, then with divergence, I saw a oversold situation with a hammer. That will give me a better drive of making a decision to get into the market. I hope I didn't lost many of you, okay? But I think specifically for Henry, if you are into all this indicator, I hope that you are following me. But if you're not, it's okay. Especially the last question, I think it's a bit complex, but it's a good starter. Yeah, thank you. Thank you, Henry. Yeah.
Hopefully that answer your question, Henry. And okay, we have one more question earlier, but it's not really a question. It's from Lin Chi. She mentioned that can email today's slides after the webinar.
Sure. I'll leave it to Imran. I think my whole purpose here is let me just share with you my first few slides here. What is my objective is I really enjoy doing this. Is you should not miss this out. My mission is to create lateral thinking skill for every investor and traders, knowing when to take calculated with market uncertainty and bolder risk when opportunity arises. So since I spend literally days to prepare this, and I hope that you can get hold of all these study materials and go ahead, use it and reference to it. Yeah. So I just want to leave my contact to you. This is how we can get connected. Okay. Thank you, Imran, and thank you all. Yeah.
Thank you, Kon Hao. Okay, no more questions, right? Calling once, calling twice.
You can always email me. Yeah.
All right, if you have any questions, please do email Kon Hao. You have his contacts on YouTube, and then please stay tuned to Kon Hao via YouTube as well. You'll be doing some videos right next week.
Every week. Yeah.
Every
So
week,
I
yeah.
got sponsorship by CME Group that they tasked me to do videos, and I'm really happy to do that. And that's how I can uh, shape the thoughts of many investors and traders. I think it's a
Right.
privilege to do that. Yeah.
Thank you so much, Kon Hao. Okay,
Yeah.
it looks like that's all the time we have for tonight. Thank you for all for your questions. and we'll reply all the questions via email after this session. If you have like slides, we'll get back to you with the slides. Thank you, Kuan Hao, again. Thank you.
Thank you.
Right. Thank you. Bye. And I will shut down this webinar. Right. Good night, everyone. Thank you.
Good night. Thanks,
Thank you.
Imran.
Bye. Thank you.
Thanks.
Thank you. Bye.
Bye.
Bye.